Okay guys, so just last week, the Federal Reserve basically just hit the brakes on every single rate cut that you hope you had for this year. And unfortunately, almost nobody saw it coming this fast. Kevin Warsh, the brand new Fed chair, just walked out and gave his very first press conference, and the message was crystal clear, even though he dressed it up in some fancy language. As you guys know, inflation is at a 3-year high, sitting at 4.2%. Oil prices basically doubled in 6 months because of the war in the Middle East. And instead of cutting rates like everyone, including Trump, was expecting, the Fed held rates exactly where they were and signaled that a rate hike is actually more likely than a cut. So, as I break down the message that Kevin Warsh shared in his public presser last week, and I try to simplify it for you, I ask that you stay with me all the way to the end of this video because I'm going to break down exactly what Warsh said, what it means for your money right now, and what I personally think happens next. Alright, so let's not waste any time and jump right into it. Okay, so first let's start with the why, because none of this makes sense until you actually understand what's driving it. Inflation had been slowly cooling off for months, and then out of nowhere it spiked back up to 4.2%, the highest that it's been in 3 years. And when you dig into where that's actually coming from, it's basically just one thing: energy. Oil prices have nearly doubled over the last 6 months because of the conflict happening in the Middle East, and energy touches literally everything: gas, shipping, manufacturing, and even the plastic in your cell phone case. And so when oil prices go up, the cost of making and moving almost everything goes up with it. And it's not just consumer prices either. There's something called the PPI, which is the Producer Price Index, which basically means what businesses are paying before they pass those costs on to you. You can basically think of it as a preview of what's coming down the pipeline to your wallet. And the most recent PPI numbers came in way worse than expected, which tells you that this inflation problem is not just a one-time blip. There's more pressure building underneath the surface that hasn't even hit store shelves yet. So let's get into what Kevin Warsh actually said in his first speech as the Fed chair last week, and I'm going to translate the Fed talk into more normal, easier to understand language, because unfortunately it can get a little complicated. So first, they want to keep the interest rates exactly the same, sitting between 3.5 to 3.75%. There's going to be no cut, no hike, just steady for now. But here's the part that really matters. He said that the committee is, quote, unambiguous and unanimous that they will deliver price stability, meaning they are fully committed to crushing inflation back down to their 2% target, no matter what it takes. He also said something that should make you pay close attention. He flat out said that inflation is a choice, meaning the Fed believes that they have full control over bringing it down if they are willing to do what's necessary. And guys, I want you to get this. The Fed's own forecast, called the dot plot, showed that the 9 out of 19 members actually want to raise rates before the end of this year, not actually cut it down. They actually want to raise it. And of course, that is the complete opposite of what most people were expecting just a few months ago, and it caught a lot of investors off guard. Now guys, real quick, if this video is giving you any valuable information so far, please go ahead and show some love by smashing that like button, leaving a comment down below, and subscribing. Your support genuinely helps this channel grow, so please show some love by smashing that like button, commenting down below, and subscribing. Alright, now let's move on to the next segment, which is the big change that nobody's really talking about. Now, here's something that Warsh did that's honestly a pretty wild shift in how the Fed operates, and I don't think enough people are talking about it personally. He basically said he wants to get rid of something called the forward guidance, which is when the Fed gives hints ahead of time about what they're probably going to do next. Now, for years, the Fed has tried to prepare markets in advance so nobody gets blindsided. Warsh wants to stop doing that. Actually, his reasoning is that he thinks that the Fed talking too much about its own future plans actually makes markets dumber. Because instead of reacting to real economic data, investors just sit around trying to guess what the Fed is going to say next. He wants markets reacting to what's actually happening in the real economy, not predicting Fed announcements. He even said that he wants to potentially get rid of the dot plot completely. And for those of you that don't know, that's the chart where every Fed member shows what they think that the rates should be. His logic, again, is basically that, hey, even our own people aren't fully confident in their predictions, so why are we pretending like this is some precise science? He compared it to everyone submitting their guesses in pencil with a big eraser attached to it, meaning that even the people making these forecasts know that they could be completely wrong in the next 6 weeks. And that's a pretty bold and honest thing for a Fed chair to admit, especially a guy who just came into office. And I'll let you know something else that Warsh announced, which is something pretty significant. He's setting up 5 separate task forces to basically review how the entire Fed operates. One is reviewing how the Fed communicates with the public. The second one is reviewing the Fed's balance sheet, which is basically all the assets and the bonds that the Fed is holding. The third thing is that they are looking at whether the Fed is even using the right data to make the decisions in the first place, and he specifically said a lot of the data the government collects comes from old school survey methods that don't really reflect how the economy actually works in 2026 anymore. The fourth one that he mentioned is Task Force, which is dedicated entirely to AI and how it's going to change jobs and productivity going forward. And then the fifth and the last one that he mentioned is reviewing how the Fed even measures and defines inflation in the first place. So now I'd like to break down why this actually matters for you. These task forces aren't just academic exercises. If they change how the Fed measures inflation or what data they trust, that directly impacts when and how aggressively they decide to raise or lower rates in the future. This is basically the Fed doing a full system reset behind the scenes while keeping rates frozen in the meantime. Okay, so let's bring all of this back down to earth for you. What does all of this actually mean for you and your money right now? Well, first, if you were hoping mortgage rates were going to drop anytime soon, I'd honestly pump the brakes on that expectation. With a rate hike now more likely than a cut, borrowing is going to stay expensive for a while longer, whether that's a mortgage, a car loan, or even credit card debt. Second, if you've got any high interest debt sitting around, this is honestly your sign to attack it aggressively rather than waiting around hoping that rates will drop and that it'll bail you out somehow, because that relief might not be coming this year. Third, for anyone who's investing right now, higher for longer interest rates tend to put pressure on growth stocks specifically, so it might be worth looking at how diversified your portfolio actually is right now instead of being overly concentrated in one corner of the market. And fourth, and honestly I think this is the one that hits the most, Warsh made it pretty clear that the next 6 weeks are basically a watch and wait period. And so much of this depends on whether this peace deal with Iran actually holds and oil prices come back down. And guys, if that happens, inflation could ease and rate cut conversations could come back on the table later this year. However, if it falls apart for any reason, things could get a lot more uncomfortable a lot faster than people expect. So guys, as I wrap up this video, here's my honest read on all of this. I don't think Kevin Warsh is some villain trying to wreck the economy. He basically walked into a really messy situation. Inflation at a 3-year high, oil shock from a war that he didn't start, a divided Fed, and markets that are more on edge than they've been in years. What he's doing right now is just buying time, being upfront about uncertainty instead of pretending to have all the answers, and setting up a structure to make better decisions going forward. And honestly, in my opinion, that's pretty refreshing compared to the usual political theater that we get from these press conferences. But the bottom line for you is this. Watching this is simple. Don't expect rate relief anytime soon. Stay on top of your debt, stay diversified with your investments, and keep your eyes on what happens with that Iran peace deal, because that's genuinely the variable that could change everything in either direction. Guys, I want to thank you for watching this video all the way through. Please drop a comment down below and let me know what you think. Is Warsh making the right move here, or is the Fed playing with fire by signaling a rate hike instead of a cut? Again, thank you guys for watching this video all the way through. Please like, comment, and subscribe so you don't miss the next updates that I put out here every other day. And I'll see you guys in the next video.